Today is Monday, September the 30th, the end of the quarter. We can see that the market had relatively good volume, finished up 0.5% up in the S&P 500. The market started to tail off in the afternoon and lost a little bit of its gains, ended up about halfway in the Dow. But anyhow, what's going to be more telling is what we see in the charts. So with the S&P, we saw that we had a candle here that was fully engulfed by the big move on Friday. Now Friday came down to not close the gap, because to close the gap would have required the candle come down as far as this. It didn't. So we can say that the gap is still technically open. The market might consider this a closed gap. We're going to have to see. But because this was a gap previously, if you look at that, this was a gap previously that took a long time to close, but definitely did close. I'm thinking it's not finished yet. And of course, the market really is uncertain and shaky. It doesn't mean we're going to start off the new quarter tomorrow, the fourth quarter, strong. There could have been some moving around of positions in the mutual funds to take some profits. Anyways, the big move was in Apple. Apple up 2.5%. This started to get me thinking that it might be time to step back into the market a little bit. I've been relying on GDX, which has not done well, and a handful of Caterpillar stock. Caterpillar was virtually unchanged today. Gold is headed towards this trend line and may go all the way down to 25.87 or lower by the time it hits this trend line before it gets a bounce. Now, it may also get a bounce at the bottom of the cloud, which has an increasing slope. So as the day goes on, the cloud support is closer and closer to the current price. The reason I have this box here is because you could say that we have a head and shoulders with, come on, why? It's not drawing it for me. But anyhow, because I've got a box here, that's why. But if you look here, we've got, this is not working, forget it. Anyways, here is the shoulder, here is the head, here's another shoulder. It's a rather lopsided head and shoulders because this shoulder came down lower than this one, so it's not very clean. I would keep an eye on the bottom of the cloud. I'm still holding on to GDX. It's always good to have gold in your portfolio. I had it as a loser for such a long time, and it came back and made some profit for me. I sold, bought back in again, and now I'm holding it at a loss. But it's my only alternative to stocks, is my little bit of gold. AGCN, which are my preferred stocks that I have a lot of, they took a big drop today. This shows that they only went down a couple of cents, but actually they went down quite a bit. They went down equivalent to the amount that they went into dividend for. So today they traded ex-dividend, and they each went down the value of their dividends. So that was half of my losses today. So I'm not too concerned about that. On October the 18th, I'm going to get those losses back in terms of the dividend. Caterpillar, we already said. GDX, we talked about. T is the one that I stepped back into because of the support on the 8 EMA. Although volume has been pathetic, I bought 500 shares of T. It's currently got a dividend of 5.39%. So that's pretty attractive in the day when putting money in the bank or buying treasuries and bonds doesn't pay. That's quite nice. And these AGCNs are 6.5 and 6.7%. They're releasing another preferred share, AGM-NCO, sometime in early October, I believe, and I'll let you know when that happens. And you'll be able to buy that closer to 25. So at 25.39 today. I also bought a little bit more AGNCM, which of course was ex-dividend, but I only paid 39 cents higher than the face value, the par price of $25. When it gets redeemed, it'll be redeemed at $25, and the next dividend will bring me back to whole. That's my thought. That's my strategy there. WHR, which I've lost in my list for some reason, had a heck of a day, and I am kicking myself for selling WHR. And because of this strength and Apple, I'm thinking that it's time to move back in very cautiously with very tight stops. The advancers and decliners line is going to move slightly back up towards the neutral line. We've seen that happen here, where we had it move back up to the neutral line, come back down, move back up, and then suffer the big drop back down to well oversold. We had a similar thing happen back here last April. And we had something like that happen back in August of 18. So let's keep an eye on that. But history would say that this is still going to go down into the oversold area. Only once back here did it actually come down below zero and then shoot back up into the overbought. So let's keep an eye on that. I'm thinking S&P needs to hold the top of this gap, and then it might be time to buy some more stocks, buy back the stocks that we sold before. Apple is going to be a tough one to buy back, but if it does clear, this was its highest close prior to its all-time high. So its recent high close was right here, this value at the top of the channel, 223.72. We opened higher than that here, and dropped. So this represents a new closing high over the previous high, which was September the 11th. So keep your eye on Apple. If it has another update, I'm going to look at selling some puts, and I don't know how far out those will be or how much I'm willing to risk there. I'll talk to you about it tomorrow.